Basically just personally writing checks into deals that I want to be a part of, because the entrepreneur has to be able to solve all the problems that come with the business.
Hey, I'm an investor in this company because I love it so much.
Try to go through a network relationship first.
So many VCs that could used to just bring cash. Now it's, hey, this is an additional value add we have.
The future of VC, you have to be unique and creative.
Welcome to the Venture Capital Podcast with Jon and Peter, and our special guest today, Bubba Page.
Thank you. Thanks for having me, guys.
Thanks for being with us.
Welcome. So you've had a major life change.
A handful.
A handful.
Yeah, it depends on what you mean.
Well, I think one specifically related to why the VC podcast I think is interesting for you and for the audience.
Yeah, absolutely. So
what other life changes are there before we get into that?
I mean, geez, I got 8 kids, man. So having twins was a pretty big life changer.
Okay.
I don't know about you guys, but that's a big change.
I don't know how you have 8 kids. It's impressive.
4 boys, 4 girls,
Wow.
all within 10 years. My wife is an absolute champ. It's crazy.
What's the age range?
Almost 14 down to almost 4.
Oof. Wow.
4 boys. It's just, it's interesting to see
Almost
that it's
every
split.
year. Yeah, it's good. It's
Almost.
cool.
The twins helped with that.
Yeah.
So that's a life change, even though they are a few years old, but still.
It's a great life change. What other life changes are there before we get into the VC related life change?
Well, you got it. So, geez, I think you mean Influence.vc.
Uh-huh.
Okay. I'm just making sure. So Influence Ventures, I started just under a year ago, and it's a venture capital syndicate.
Yep.
So I'm basically just personally writing checks into deals that I want to be a part of. And then I'm inviting my network of investors as a syndicate. And then we just can come together as a much larger check into those deals as just one entity on their cap table. I guess the hope is that I can bring one unique value proposition is bringing the expertise of working with social media influencers, either as investors in that same deal or as promoters, affiliates or sponsor type content. There's just not as many venture firms that work with influencers, and I've been around that a lot. So
outside of Space Station, I mean, Space Station is the only other one I'm aware of.
There's some out of the state.
There's a bunch out of the
state.
In
LA, in San Francisco, there's some out there. Mm-hmm. And so it feels like it will become, I think, more of a thing, or at least venture firms will bring on operating partners that have that expertise, because I think we've all seen how influence can dramatically impact a business for good and for bad. I mean, there's both.
Yeah, one of the things I've noticed in the last 10 years is with a VC and so many VCs, they could used to just bring cash. Now it's, hey, this is an additional value add we have. Yeah. I think in Peter's case, he's got a bunch of students that are extremely valuable. I think his value adds more towards other VCs because they can provide a lot more due diligence than a traditional VC might have.
I mean, sometimes, but we also do a lot of projects for entrepreneurs.
Okay.
Right, we pitch it as like your lead VC will help you with the top 50 things.
Yeah.
We'll help you with the bottom 50 things that nobody else would ever touch. Where I can throw like 8 to 10 smart people and just crank on something for you for free. Right? Like every entrepreneur loves this. They're like, oh yeah, man, like I got like 10 right now. Please. Yes. Right. So
that's best. No, I think it's great. You have to have some, I think the future of VC, you have to be unique and creative.
Oh,
it's not just a check. Either you're one of the biggest brands, and then maybe you don't have to have anything unique except for you're the biggest, baddest brand of VC. Or you come to the table with something that somebody wants. And my very first deal, I get a phone call from Pelion, from Kickstart and Convoy to join in a round that was already oversubscribed.
Nice.
And they're like, Bubba, look, it's already oversubscribed. We'll carve out a tiny little piece for you to come in because we want and need your expertise from the social perspective. My hope is that value add gets me into deals that I wouldn't have otherwise.
What was this deal?
Into. They haven't gone public with it yet. Can I say it?
I don't know what you're.
They haven't announced the funding round yet.
When does the funding round get announced?
I should follow up on that.
Okay. We believe in like maintaining secrets, so I don't want to like push you too hard.
I want to promote it, guys. I'm on the box. I want to promote it. So
what do they do? Like in broad terms, and like what's the value that you're bringing?
So one of the co-founders of Divvy, friend of mine, we talked a few years ago about this concept of Divvy for families.
Ah, okay.
And if anybody's listening, you're familiar with Divvy.
Yep.
So some product people from Divvy left to create this Divvy for families product. So the moment that Alex called me up and was like, hey, it's actually happening, I was like, dude, I'm in. I was already sold on this idea 4 years ago when we talked about it back then.
Yep.
And Divvy ended up staying focused on B2B, which is great. And so now these guys are creating Divvy for families. So is the name of it. I'm stoked. I think it's going to be awesome. Their pre-product still in the process of building.
Do we have to bleep that out?
Maybe I need to follow up and just double check.
We'll blip it out if
I'll
we
follow
need
up
to.
with you.
If we remember.
But I want to promote them because heck, I'm an investor. Love the idea.
I think it's a great idea.
And with 8 kids, like I know the pain. I want to teach my kids financial literacy.
Yeah,
I want them to
yeah.
use credit cards.
But you want to track it and control it too.
Absolutely. I want all the functionality of what a Divvy did
Yeah,
for
yeah,
business
yeah.
for my family. And there's a few other players out there that we've used personally, and they're horrible.
Yeah.
The user experience, at least, has been miserable. And I think these guys will crush it.
You're also an investor in Gab, right?
Yeah. Yeah. So, I mean, and that was as an angel.
Okay.
And so Crew Financial was like Influence.vc's first deal. And Gab, I came in. This is actually a unique story. I got to share it.
Okay.
Yeah, please.
Okay. So Gab came in, a friend, go to Landon, came in and said, hey, we're raising the seed round. We want you to be involved, especially if you can help to promote this product. So they talk about safe tech for kids. I'm like, I'm all about that. I don't want my kids, on social media feeds or YouTube or browsing the web without some safety protocols.
Yep. Some guardrails.
And at least up to a certain age.
Sure.
And so they were building a trainer phone for kids. I was like, absolutely, I'm in. So I wrote a $25K angel check into the seed round. But then I said, look, as we promote it, what if, since at the moment we don't need that commission as an affiliate, we don't need that commission, could you convert it into equity?
Mm-hmm.
And they were like, what? Like you can do that? And I'm like, I think so. I've never done it, but I think we should. And so we created a structure to where they capped it at only 50K. So we could only earn up to 50, and then after 50, they'd pay a normal cash.
So that was like 2 days from what your guys' influence. I've heard the weight your guys' like media assets.
My wife, Jordan Page on Instagram, if you're watching.
I was going to
Shout
say,
out to her.
You got to give us the backstory here.
Oh, I'll give you more of that for sure. But through her influence, I helped a tiny bit, 1/10 of what she did, because that's about my size of following. We cleared that in, I think, 3 to 4 months. And then beyond that, we just continue to receive commissions from the affiliate. Anyway, we totally believe in the product. We love the mission, and all of our kids use it. And now the company is valued. You've
seen a healthy write up and valuation of your investment.
Yeah.
That's great.
And I hope I can educate more influencers to know
Yeah.
that they can also potentially exchange value for equity as well.
Yeah.
Especially if it's a pay for performance structure like we did with commission.
Yeah.
I think that's a win-win-win for everybody. Gab got to keep their marketing dollars,
Yep.
spend it on other things. The influencer gets to diversify
Yep.
our investments or assets into equity. And then the business gets sales.
Yep.
I don't know. I mean, that's a pretty sweet gig. I don't hear that happening very often unless you're like an A-list celebrity.
I think a lot of them get hit up for equity, but I think a lot of influencers, the concern is, how do I know I'm going to get something out of this deal? And I assume
Eventually,
that's part of what you're helping to structure.
I hope. I mean, we came in again as an investor and influencer. I prefer that versus just a straight trade.
How often are you doing that in the deals you do with Influence.vc? Like, do you structure those?
No. I mean, that would be the goal.
Yeah.
We haven't done enough deals with this structure yet.
Is there a reason why? Is it like you just haven't tried yet?
Some are too early.
The companies are too early. Okay. Yeah. Like this one that's pre-product. Right. Yeah.
So pre-product. There is a deal that we did called Counter. I can't talk about that one.
Okay.
Eatcounter.com. Shout out.
Okay.
They just got their product as a macro. Have you ever counted your macros?
Sure.
Like
Yes.
the healthy.
I do it every day right now. I'm down 20 pounds.
Are you serious?
I'm trying to look good like you.
Dude, that's amazing though. That's a big deal. So counting your macros, frozen foods, typically we think of frozen foods as horrible for you.
Right. Processed.
Horrible.
Just
High nitrates.
High nitrates. Yep.
So these guys created a macro-based frozen food company.
Cool.
Where healthy, high in protein, all this stuff.
Are they like a competitor with, what is that brand? Like Real Good? food or whatever. Have you seen that
Yeah,
one?
possibly.
Factor?
No, not Factor.
Not
Those
Factor.
are like meals that get delivered. These ones, so these guys are already in Target.
Cool.
They're in Walmart. They're in Sam's Club. In their, they're not across the country yet.
Yeah, I gotta go try them.
They're awesome. They're not in Utah yet, but you can order.
Okay.
Okay.
Maybe I can get you guys some samples. Anyway, they already brought in 11 influencers that had large followings, specifically in the macro health space.
Makes sense.
And they came in as investors and are promoting. Then some of them are recipe, like chefs.
Yeah.
So they've provided the recipe to the company, so
Yeah.
they know it's a tried and true recipe.
Yeah.
The audience already loves it. Now they put it in a form where it's shipped across the country in these frozen.
Have you
anyway,
ever?
stoked.
So is there like a standardized document for this?
I'm going to create it.
I was gonna say you should create it
I'm
and
gonna
then
create
post it out there and put
I'm
a
gonna
ton
give it
of
away
like
for
effort
free.
behind. Yeah, just like a safe,
Totally.
right? Yeah, I think it's genius.
Yeah. So that is part of the goal. I've been talking to folks about that specific thing. I want
Yeah.
to provide that for free and other educational info. I think a lot of influencers that are out there, they they haven't been an entrepreneur before becoming an influencer.
Yep.
So the concept around like what a cap table is or raising capital and what investors do and how that works, I think is fairly new to some, not all, but I'd love to help that educational side of it and just give that away to just help in the world.
It's great.
And then hopefully that brings the whole ecosystem up as influencers get involved in more businesses and help them to scale.
I'm curious, who are the influencers around you? Like not specific names per se, but the types, the demographics, right? That are coming in alongside you in these deals.
Yeah. Well, primarily they're going to be women between the ages of 20 and 45
Okay.
because that's where the network of who my wife and I have worked with for the longest time.
Got it.
And so we host an event every year. It's called the Page Summer Soiree. It's this costume themed party. It's my wife's like love. She absolutely loves
Big
this
event.
party. It's like a wedding every single time at that, that level.
You guys just had it, right?
We just had in August. Yeah. And the idea is it's not you have to have a certain number of followers to be invited. That's not it. It's just if you're producing good content for the world and there's some relationship to my wife, then there's a potential to receive an invite. My number one, what is that test? Characteristics tests. Oh my gosh, it's blanking.
Myers-Briggs?
The other one. Anyway, is includer. I just...
Gallup poll.
Gallup.
Strengths Finder.
That's right. Strengths Finder. Thank you.
Yep.
Is includer. So and I know my wife has that same feeling. We want to be inclusive, not exclusive. This specific event, we have to limit it to certain because of location and food and all that stuff. But
Yeah.
so we've gotten to know a lot of these people, these influencers through that, and then working with them and going to events. My wife is literally right now in Jamaica on an all expense paid trip because she's one of the top affiliates for a makeup company, Shine
nice.
Cosmetics.
Nice.
And so you go to those types of events, you're hanging around all the other top affiliates and you create relationships.
Look at you. You're a good dad.
Me and
At
8
home
kids,
with
man.
8 kids.
Oh, right.
And
Let me
she's on the
clarify.
beach. That's
she
great.
is on the beach. She earned it though.
Oh, 100%.
She earned every
100%.
second of that vacay and stoked for her to be there. So yeah, I'm hanging back, taking care of the kiddos. We do have a nanny. Let me put that out there. When we went from 6 kids to 8, it was like time.
Yeah.
So that's the only reason I could be here right now.
That's fair.
Thank goodness for nannies.
Yeah. So anyway, that's primarily, they're going to be talking to other women. That's mostly the focus. Yes, I do have maybe a subset, maybe 10% that are male influencers. Maybe it's a little higher now just because of what I've been doing with influence.
Yeah. What kind of influencers are they?
Typically, they're going to be doing more business entrepreneur type influencing.
Cool.
It's like you, Peter. You.
Yeah.
Like you, John. You're an influencer.
Yeah, you got
I'm
it.
just the intern.
Whatever. But anyway, that gives you a little story.
That's cool. I like it.
How has your life changed since starting Influence.vc? How have your perspectives changed?
Well, I think on a day-to-day basis, as an angel investor, it's very just casual, and you take it whenever it comes. You look at deals or talk to people, making it more of a structured format.
Mm-hmm.
And then I think the second that you put VC or investor on your LinkedIn profile, you get bombarded.
Yep.
Obviously, most of the people who come in through LinkedIn, just FYI, if you're going to hit me on LinkedIn, try to go through a network relationship first, because there's just too many messages, too many deals. I'm probably not going to look at it. But if you can come in through somebody that I know that says, hey, can you talk to this person, or you should, then those go to the top of the list of what deals I'm going to look at first.
Yep.
And like this week, I've written 2 angel checks just this week, but I'm backing people that I know, love, and trust, like people I've wanted to back.
Yeah.
And I did angel. I didn't do influence because they're, again, way too early.
Angel.co?
No, just
him
as an
personally.
angel.
Okay.
Sorry, as a person angel. And then my goal is that with these companies, I got in early enough so when they raise their next round, I can have influence join the next round and bring in a much larger check, if that makes sense.
I like it.
But typically, these quick decisions, like they were literally like one meeting and I'm writing a check. When I have a relationship with that entrepreneur for X amount of time, that can happen.
Sure.
I had another call. Anyway, talk about like day to day. So my day is just packed full of pitches
Okay.
of companies, which is great. I love it. But one of the companies that was pitching today, I just straight up said like, look, hey, you seem like a good person with a good business idea. You're very early on the traction. I would love to begin our relationship now. And if you can update me every 3 to 4 weeks, or even 4 to 6 weeks, I want to be able to see dots on the graph, and over some time, that'll help me to understand you and who you are better, and how you handle maybe conflict or struggles. Because I'm going to bet on the entrepreneur first,
Right.
versus the idea, because the entrepreneur has to be able to solve all the problems that come with the business, and maybe the business changes and they pivot or
Which it probably will.
it will, guaranteed,
It will.
right? So you got to bet on the entrepreneur, and so relationships are a big deal for me.
Yeah. What else do you look for in a deal?
Yeah, like what are the metrics?
Or
metrics, yeah.
characteristics,
Characteristics
whatever
are
it
better.
is, like, yeah.
I think for me, characteristics are more of what I base my judgment off of, because the specific numbers of every deal vary so drastically.
Yeah.
Because if you're investing in a pre-revenue company, what metrics do you
I
have?
don't got anything. Yeah.
Right. And so that is purely, I bet on you as an entrepreneur. That's number one. So people first.
Yep.
Then I typically look at their market. I want to be able to see their market size just to make sure that it's a venture backable deal. Because some pitches will come in and I'll say, guys, that's a phenomenal lifestyle business. You should do it.
But don't raise money.
But don't raise money. You don't need to.
Yeah,
my first business, Launch Leads, was not a venture backable business.
Yep.
That was a great business.
But it was a phenomenal lifestyle. And it taught me business sense and the ability of hiring and training and building processes and systems.
And how to exit it.
And that helped how to exit it. But so anyway, I look at their market just to make sure it's viable. And even if they're starting with a smaller market, knowing that they can expand, that's important.
Yeah.
And then their idea is last.
Yeah. How important is it that you feel like you can bring value through your network and through your investors?
I think as an angel, it's less important for me.
Sure.
If I'm doing the deal as influence, that's part of the quote unquote thesis.
Yeah.
Is I want influence to be doing deals to where we can provide that value.
Yeah.
As an angel, it's more like, hey, I love you and I want to back you.
Mm-hmm.
And when you're further along, let me bring in more capital.
Yeah.
Yeah.
How late will you go? Because it sounds like you do a bunch of angel deals. I'm assuming like pre-seed, pre-product, some seed, maybe at the influence.
Totally.
Do you go above that?
Yeah. So
Do you
stage
do like
agnostic.
a growth stage deal, doing
Totally.
like 50 million in revenue, consumer product kind of thing?
Besides these 2 deals I just did this week, I'm doing a deal right now. They're doing 250 million plus in revenue.
Yeah.
Growth stage, totally not. So for me, stage agnostic is fine. I'm not a fund, so I don't necessarily have to stick to a thesis.
Yeah.
And I love the syndication idea. Not that there's nothing wrong with funds, but the ability for investors, my investors, to just pick and choose which ones they want to be involved in, instead of them giving me the money and then I just allocate it wherever I think it should go.
Do you find that, like, how often do you bring them a deal and they're like, yeah, I'm in because I know Bubba, versus like, well, Bubba's up in the night on this one. I don't get it, and I'm out. Or like, yeah, this is really cool just on the merits of the deal. Does that make sense?
Yeah, I'd probably say 25% of the cash that I raise through the syndication is purely just, if Bubba's in, I'm in.
Yep.
And I appreciate that. That's flattering.
Sure.
But I think most are looking at it and saying, okay, I'm going to put my 2 cents and my thinking through this.
Yep.
And it is helpful. It's a good signal that Bubba has done his work to look through it. But again, we won't lead a deal.
Sure.
So we want to follow along because I don't have the due diligence, people. So I'm doing my own little piece.
Yeah.
But I want to be able to follow along in somebody that's more sophisticated in that process.
Sure.
So I think the 75% of it is, hey, here's the deal. Here's why I'm doing the deal. This is why I'm excited about it.
Yep.
But I want you, Mr. or Mrs. Investor, to make your own decision.
Yep.
And I get no's all the time, which is great.
Sure.
Because they come in when they're stoked and then they're excited about it. Like this counter company. One of the investors was in Texas for the football game, the BYU football game.
Yep.
And he remembers that Texas is one of the states where Target had the product. And he was like, hey, he talked to his wife, let's drive 15 minutes out of our way to go to the Target to see if they had, and they had one product. All the rest was sold out. Literally all of it. So they grabbed that one product. Everything else was sold out.
And they probably felt pretty good about that.
He was stoked.
Hey, look, everyone's bought it.
He sent me a video of it. Like, look, this is awesome. And so I sent it to the founders, and the founders are excited, and everybody's pumped about it.
Yep.
You do more consumer plays, right, versus SaaS, or does it matter?
Doesn't matter to me. I think.
But historically, of deals you've done so far, I'm guessing because you've done Gab, the ones you've talked about always have something physical I can hold.
Or they have a consumer aspect, right?
Yeah, those are the ones that I've brought up in this discussion, right? But like, and Homey is one that we did early on, and I say that was an angel pre-influence. Flashlight Learning is a pure ed tech play.
Okay.
So it has nothing to do with consumer necessarily. I mean, I guess their end product helps students, but they're selling into schools. I don't pick and choose based on whether they're B2B or B2C. Right now, I think the consumer model with influencers is proven to be helpful. So that does make faster sense some of the times. I believe there's a huge market of LinkedIn influencers that has not been exposed as a go-to market plan yet. It's less frequent than consumer play. Does that make sense?
I see. So you're saying like if I had some LinkedIn influencers and you backed like an enterprise SaaS deal, and then they're the ones that are like pushing it on LinkedIn. So
if you think about it, if you're going, let's say you're a fintech company, right? And you're selling into banks. Well, who is speaking at the conferences that you go to?
Right.
Who wrote the book?
Right.
And if they're speaking, then they're an influencer. And if they're on stage and they say, I wrote this book and I'm cool and I did this and that, and they say, and I'm an investor in such and such company because look what they're doing.
Yeah.
That's probably going to have influence.
I'm really curious your thoughts on this around, so the influencer makes an investment in this company. How there's this like conflict of interest piece of it, which is like, you invested and now you're promoting it, but like, are you promoting it because you really believe in the product or because you just want to generate a good return? I'm just curious, like how you think about navigating that whole issue.
Well, it's happening every day with every influencer on the planet.
For sure.
So the bummer is that more often than not, the influencer, especially on a lower scale, like sub 100,000 follower type scale, anything that's sent to them, they're going to promote it. Right. Because they're trying to make ends meet.
Yep.
They're
not always disclosing, like, I'm getting paid.
They should.
To do this product. They should, but they're not always.
No,
right?
they're not. They're not. And that's, so as an investor, I need to be saying, I'm an investor in this product. And so typically, when I'm posting, you maybe have seen a couple where I'm like, I love being an investor in blah, 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 blah. And so it's disclosing I'm an investor. I would hope that if somebody's willing to write a check as an investor, that they would want and believe in that company enough to do it.
Yeah.
When they're getting a free product, it's different.
Yeah.
And their incentives may not be as aligned. Or if it's a purely paid sponsorship.
Right.
then their incentives may not be aligned at all.
Right.
And so, but this is happening every day, all day on every platform. And as consumers, we have to realize that these influencers, they're getting paid to talk about XYZ company. And they should disclose #ad or partner. Or
I feel like most people do recognize that, though. I would be shocked if, like, your average person that sees, a woman, talking about some new lotion is not getting some sort of compensation.
I do think like not sponsored is what's happening more now.
What?
I'm not promoted by this, but I love the product.
Oh, yeah. Like they make the disclaimer. Yeah, and then you just assume. But I actually think it's a pretty strong statement to say, hey, I'm an investor in this company because I love it so much, right? And nobody's paying me off. So, yeah, I think that makes sense.
So that's where I think like the influence, Influence.vc, bringing these influencers in.
Yeah.
That hopefully will prove to the audience, like, I'm a believer. I love this. At least they love the concept of it if it's not there yet. And then what I think, I was going to give another shout out to my wife. I think why her audience is so loyal is because she said no to hundreds, if not thousands of products that wanted to sponsor or give. And she's like, well, I don't know if I would use that.
Right.
And because she said no, and she only promoted the ones that she loved, for the most part, I think people felt it. They can feel the genuine authenticity.
Yeah.
And so when she does say, this sweater is my favorite sweater of all time, she sells $200,000 worth of that sweater because they believe what she just said.
Yep.
And the same thing happened with Gab and a bunch of others. Anyway, that gives you some insight into some influencer stuff.
Very cool. Curious, shifting gears a little bit away from influencers, but just venture in general. Yeah. We've been having conversations with others, especially at the seed stage. Do you feel like deal flow, and I get that you're kind of new into this, doing this, but do you feel like deal flow is increasing, decreasing? Are valuations that you're seeing going up, going down? Just curious kind of what you're seeing at the seed stage.
So I started angel investing in like 2015.
Yep. Sorry, I meant with the fund. I know you've been angel investing for a long time.
No, but you're right. Yeah. So angel investing 2015, but then the influence is only a year.
Yep.
I absolutely think I'm seeing way more now than I was before, and I think valuations are coming down.
Yeah.
I'm seeing more flat rounds, down rounds, bridge rounds, that kind of thing.
Are you seeing more deal flow? Like I guess there's a distinction between, there are a lot of companies trying to raise, but how many deals are actually getting done? Does that make sense?
Well, I think on a percentage basis, it's lower.
Yeah.
Because there's more coming in. So the top of the funnel of deal flow is very large, in my opinion.
Yeah.
It's just bombarded with deal flow.
Yeah.
Hence the caveat, come in through somebody that knows me.
Yeah.
And that will put your deck on the top of the pile.
Yeah.
Or meet me. Go to an event that I'm going to be at or something, shake my hand, and then we can set it. Anyway, the quality of the deals, I feel like they're better.
Yeah.
I think people understand for the most part that they need traction. Because right now, if you don't have traction and you don't have any of the other plays, like I'm a repeat founder, I've already built and sold this and this and this.
And it's in AI.
And I really think that if you're a first-time founder or you haven't sold something before, you have to have traction. Yeah. I don't know how you're going to get funded. Because even some of those who do have, some level of traction or do have an exit, they're even struggling sometimes. But like the 2 deals that I did this week alone, they were repeat founders. I've already seen them. I've already known them, and personal relationship, known them for years. Mm-hmm. And I could probably say this, but so Phi that helped with Kirk Wimet and Scott. I think, like, I've wanted to back Kirk for a long time.
Sure.
And no, I don't know him personally in an in-depth level. We've seen each other a bunch and we've talked a bunch over the years. Mm-hmm. But when they pitch the business, I love the business model. I do think influencers can really help that business.
Oh, for sure.
And I wanted to back him because I believe in him as a founder, and I believe in him and his technical capabilities and who he's going to recruit to the team.
And that company, by the way, is like AI plus data plus vitamins, effectively, right?
Exactly.
Really interesting play. Yeah.
And we'll see. And it could pivot just like any of these, right?
What's interesting is the number of companies that I've been seeing lately that are doing something like that.
Yeah.
Maybe it's not, maybe sometimes it is vitamins, sometimes it's not, but like just how important our health and leveraging AI to improve our health, generally speaking, is like this new trend I'm seeing more and more and more of.
I think we're starting, I don't know, maybe it's just our age.
Yeah.
But like I'm starting to you're counting your macros. Like you wouldn't have done that 10 years ago. Maybe you would have. I wouldn't have.
I did.
Oh, that's awesome.
I was single 10 years ago, so you're dating. You're on the market.
That's right. That's true. But I think the older I'm getting, I'm the more conscious I am about my health anyway. So I do believe in what they're doing. The other deal, so Sear, you guys have been seeing Sear pop up, Zach Holmquist.
Yeah.
I didn't know you're in Sear.
Just happened.
Okay. Congrats.
So thank you. But again, it's Zach, right? And then his co-founder, Sonny, the CEO, Sonny Washington, have known each other for a decade.
Yeah.
And we used to go to the same gym and we'd see each other like all the time.
Yeah, Sonny's great.
And is their business model like something influencers can help with? I don't know.
Maybe.
It's an angel
not.
deal.
Yeah.
It's an angel check.
Yeah.
But I love them.
Yeah.
I think they're just good people. They've been there and done that before.
Yep.
And I know for the young entrepreneurs listening, that's probably really hard to hear of like, oh, you have to be a repeat founder and have a successful exit in order to get funding. Well, how do you begin that journey? I would raise my hand and say, do a non-venture backable startup first.
Yeah.
A service-based company where you can cash flow, get profitability, build a lifestyle and an expertise and sell it or cash flow that to fund your next idea. To me, I like that business model.
Yeah.
At least for young, early stage entrepreneurs.
Yeah. No, I think that's great advice for sure. And oftentimes, like if you really got to go the venture route, go find somebody who has done it before, co-found it with them, or go work for them. Yeah. Right. I think those are also like good ways. Cause like, I think there are a lot of great entrepreneurs that have started something after they've worked at a startup. And that also gives you confidence.
Well, and that's Divvy for families, right?
Yeah, for sure. Right.
Literally 10 guys left Divvy and started this business.
Yep.
Not guys, 10 men and women.
Yep.
Okay.
And it was a no-brainer. They had never started a company before, but they were coming from the business that they were going to emulate. And I was like, done.
What do you want people to know about Influence & Co? Or sorry, Influence.vc. What's Influence & Co?
Nothing. No, okay. So Influence Ventures.
But what do you...
Influence.vc. That's the.
Where do you want it to be in 5 years?
I really want to help as many people as I can gain access to deals that they wouldn't have otherwise done. So I think my network of investors, most of them don't have the deal flow that I have.
Okay.
Or else they wouldn't come into the deal.
Mm-hmm.
And so I think a lot of my network, primarily they're entrepreneurs or they're successful executives at different companies. And they're not seeing deals. I want to help educate them on what these type of deals look like, what the returns look like, what the risk factors are, and then help them understand how they can get involved if they want. So what does that look like in 5 years? Well, I've only done a handful of deals so far in this first year.
Mm-hmm.
I think I can double that next year.
How many deals have you done in your life?
I think I'm getting close to not 20 yet.
What's the average check size?
As an angel?
Yeah. My average check size is like 10K.
Yeah.
Pretty small.
25 to 50K is usually what I'm writing.
Those are pretty big checks though.
It depends on who you're talking to.
I think for most angels, that's a large check.
Well, I want to have enough skin in the game to where it's meaningful when something happens.
Okay.
I wish I would have put a lot more into Gab, for example.
Okay. I think everyone does, right?
Right.
How's Gab doing, by the way? We're actually sitting outside Gab last night in the Kiln parking lot.
Just got a brand new office.
Yeah, they moved a few blocks away, a couple miles away.
I think they're doing very well. They're helping so many people, and I just love their mission.
I love what Nate's doing. I love Nate.
He's a great guy, and I need to get to know him better.
You don't know Nate that well?
Not well. So let's get to know Nate.
Okay.
But yeah, I think what I hope to see it can happen is, one, I want to make a change in people's lives. I want to educate the influencer world to be able to come into deals. I don't have a number.
Okay.
How many of these people do I want? 10,000 people to be doing this? Do I want 1 million people to be doing this? I don't know.
Okay.
That's something I should put on my goal list of what to do. There is one caveat. I think there's another educational piece. I've been talking to Origin Ventures.
Okay. They're a Utah-based VC fund, right?
Not Utah-based.
Oh, they have an office here?
But they have an office here. Anyway,
Dan Caffey talks about them a lot.
Yeah, they're good firm. They've got a big fund and they're doing amazing deals and are very active here in Utah. And we were talking a lot about educating specifically women in investing. And I think with my network of more female influencers, not just from an influencer, but even just women in general, I would love, if I can, to make an impact in that segment as well.
Pellion's focusing on that too right now, right? I think they've got their founder fund specifically targeting female investors.
That helps. And so did RevRoad.
Okay.
I'm an LP here and in Pelion.
You're everywhere.
You gotta be.
Okay. Let's talk more about like the fund formation side. Well, so I know you're not like a fund, but like how you're doing it, because I think our audience is split in two ways. You have people who are looking to, get funding, but also some of our most popular content is people wanting to someday like start a fund.
Oh, okay. Yeah. So the way that I did it was through SPVs, special purpose vehicles.
Okay.
And you have a master SPV that essentially is the core legal structure around everything. And then you have individual SPVs for each individual deal. And the way I did it, I mean, there's documentation online. You can get templates and whatnot. I used a group called Savvy Legal. They're a local group.
Okay.
That helps to kind of formulate these things for you.
I didn't realize they specialized in the SPV market.
Yeah, that's their cup of tea.
Okay.
And so worked with them. And then what that allows me to do is to be able to raise capital from these individual investors. They do have to be accredited investors or qualified purchasers.
Are you qualifying them, or are you just making them self-disclose?
They have to self-disclose. That's kind of how everybody does it.
But you're not like looping in their account and saying, hey, we need a...
No, I don't know anybody in my network, I've never had someone do that to me.
Okay.
Basically, you're on the hook. If I self-disclose that I'm a accredited investor and I'm not, I could get in big trouble. And so we would hope that these investors are mature enough to know that they should follow that the legalities there. And I think you can look up online like what an accredited investor needs to be. It's something around like you have to make $200K per year individually or $300K combined with your spouse, or have $1 million in net worth outside of your primary home. Those are pretty low qualifications in today's day.
Especially with inflation.
So you have to be accredited. Qualified purchaser means you have to have 5 million in assets, not including your primary home. And then we have them self-disclose, and then they wire the funds into our account, and then we take those funds as a combined unit into the company, and we wire it to the company. And then it's on the cap table of the company is just InfluenceVC.
Okay. And so then you do all the taxes and accounting and K1 distribution.
Yep.
That gets expensive over time.
So you collect fees.
What's your fee structure like?
It depends on each deal, but the norm out there is a 2 and 20. This is interesting. I think this is something that not a lot of people know. So let's share this little caveat here. I'm an investor in quite a few funds, and their fee structure typically is a 2% admin fee and a 20% carry. So let's do the quick snippet of what is a carry. Do you think this is appropriate for the podcast?
I mean, we've talked about it from time to time. But
okay. Well, let's just hit it for a quick snippet. 30 second. Carry is when, let's say, we invest $1 million into a deal that's at $5 million valuation, and then they sell at $20 million. So their valuation went up. And do the math. I'm not going to do it in my mental math here. The profit of the proceeds, essentially after you're paid back your original investment.
So like, let's say the fund pulls in $4 million.
Yeah.
Excluding the initial investment of $1 million, you get 20% of that. So in this case, it'd be probably about 20% of $3 million.
Yeah, that's right. That's exactly right. So 20% of the $3 million profit goes to the fund. And then, everything else is distributed among the investors. So that's one major reason where venture capitalists can make money. And if they're good, that's where they're going to make almost all of their money there. But I think one thing that most people don't understand is that the 2% fee, admin fee, is an annualized fee. Every year,
Yeah. So what are you doing in that case? Because most funds, they have cash on hand and they're just slowly drawing it down. But in your case, you just get like a one-time payout.
So we have to collect up front.
Okay.
And so
2% for 10 years? Is what
2% for 10 years is 20%, right?
Okay.
And so, but most investors, even those who have done a lot of deals, they're shocked to realize that 20% of their investment is being withheld for administrative fees. It's literally, it's shocking. So, some of the deals that I've been doing, I can go as low as maybe it's 1 in 20 or something like that, or depending on if there's a structure where somebody else has a fee, then I'll reduce my fees so that people aren't being over feed. If it ends up being that 2 in 20 structure, then it feels like, okay, that's where the norm is. That's what normally people expect. But at SPV, I like to be below that typically. And it does vary on the deal. It depends on how much is being raised as well.
So if I were to write you a $100,000 check, you would take 20 grand right off the top as part of your
that's part of the
InfluenceVC.
That's part of it. Now, depending, like the deal that I'm doing this last week is just a 1% up front. So that would be 10. Right. And that is supposed to cover my costs over the next however many, time.
What do you think your cost per year per SPV is?
That also varies a lot. But, depending on how many people you have involved in that SPV, because if you have 5 people involved in the SPV, it'll cost less. If you have 100 people involved in the SPV, you got to pay for all of those K1s to be distributed. So there is a wide range of how much that could cost.
Are you taking board seats with your investments? Because partly with the management fee, that can be calculated. If you're a smaller deal, a lot of times management fee can be higher if the audience doesn't aware. But then if you're also not taking a board seat, then that would adjust for it too. Yeah,
no board seats typically. But also we haven't done enough to see if that's even an option.
Are you looking to get into the board's position?
Not today.
Okay.
But it would have to depend on the deal. Again, all these are based on a deal by deal basis. If there was a company that I feel like I could really provide expertise in helping them and they invited and said, look, we'd love to have you as a board member, then I'd probably consider it for sure. My bandwidth will only allow so many of those board seats realistically. And if we're writing a much larger check, typically we're a $500,000 to $1 million size check as a syndicate. But if we're writing a $5 million check into a deal because they're raising 20 and somebody else is putting in 10 and we're putting in 5, they'll be the lead. We'll put in 5. Would we want a board seat? Yeah, most likely. And so deal by deal basis. But happy to participate, if that makes sense.
Okay. That's I don't think people realize the dynamics. What are your costs in operating? Because you don't have any partners. Are you paying yourself with it or using it for sourcing deals?
Yeah, so I just went to an event. Went to FounderCon. It's Techstars.
Okay.
Bigger group where they have all the alumni come together. And so yes, that would be to me, it's a marketing expense. So it's
when are you building a team?
That's
what I'm excited for. That's things that I'm watching. I'm like, what team is going to form around you?
I've been having some conversations, and I definitely don't want to do it alone. I just like people too much. So having some of those initial conversations, just being super patient about it. Right now, the lifestyle is also very helpful to be able to just do a deal when I feel like the deal is right. And when you start building a team, you have a little bit more of a structure, and you need the deal flow to continually be coming in order to support this team, because you got to have the fees to pay for the team. So I think I want to be very careful about that process. I don't want to ever be forced into doing, and I don't think you ever will be forced into doing a deal. There's so much deal flow, but mentally you have to realize, okay, well, there are salaries on the line that have to be covered. And so you want to make sure you're doing the deals. And I think that's where funds, if they don't allocate all of their cash within a certain amount of time, it may push them into a deal that maybe they wouldn't have done if they didn't have to. Whereas the current syndication process, it feels like I'm more flexible and I can just do a deal whenever it feels totally right to do.
Does it feel like herding cats?
Oh, for sure. That's a huge pain point.
So my prediction is in 2 to 5 years, you're going to have a fund.
That could be true.
Because then you could just do a deal when you want it. You could do your capital call. You're not having to go harass 10 people on a case-by-case basis. Because in that case, each one is like a separate LP who wants in. But some of these, what is it? Someone was showing me, what is it? Daniel was showing me one. I'm going brain dead, but like there's companies that like will charge people for your deal flow access. Are you thought about doing that?
As people have pitched me on that idea as like a membership, and I haven't wanted to go that route.
Daniel Falabella off the COA, he was at Duolingo.
Oh, that's right.
He talked about I think he's part one of those groups, and he pays his membership fees. He's like, John, they make so much money.
Yeah. Well, and it should kick some of the angels' butts in gear of start writing checks. You're paying me a fee to see my deal flow. Stop sitting by the sidelines. Like actually write checks. So I can see that there's a benefit there, and I can also see that building a community is beneficial. And so I could see that. I haven't chosen to go that route just yet. I feel like I want to be able to somewhat prove myself as an angel. I've had some fun wins. I've also lost and in deals that I thought would be awesome, and they failed, which is okay. That's part of the plan, right? I'd love to be able to show a little bit more traction for me and my track record to be able to for people to see if there was deal flow access that was a membership type thing. I could see that being a possibility. Could a fund be down the road? Yes, fund could be down the road. I'm leaving all of those options wide open. And for me, I'm looking at this as, okay, I think I'm combining my superpowers. I hope that's what I'm doing, is combining superpowers into what I'm doing today. I hope everybody kind of finds what their superpowers are, and that's what you end up doing, because you end up loving it way more. You're more passionate. Work doesn't feel like work, that kind of a thing. It feels like I'm headed in that direction.
Okay.
But for me, I always know that I need to get going on something first before I can like truly make a decision. So I've been now doing this for a while, and I love it. And I think, the pieces of the pie that maybe I'm not as good at, administrative something or other, or spreadsheet something, those pieces I can accommodate with rockstar team members.
Okay. How soon will that be? 6 months?
That's a good question. Between 6 and 12 months.
Okay. What are your hardest, maybe this is my last question because I know you got to go.
Yeah.
What are your hardest lessons learned as an angel?
You're going to lose a lot of money.
Okay.
Philanthropy, maybe, is what the call is.
You look at it as being philanthropic, or?
I mean, the reality is it is very philanthropic. Okay. As an angel, as a VC, I think it's different, right? Because you got fee and carry, and there's different pieces of it. As an angel, you're not going to win. I mean, you need to do about 20 deals to ensure you make money. This is where all the books, the people who talk about it, they say you should be doing at least 20 deals as an angel to make it viable. My hit rate is a little bit higher than that, which is helpful, but you're going to lose. And you're going to lose with some of your best friends that you want to invest in. And I recognize from my venture-backed startup that didn't pan out, I was devastated, just devastated. It rocked my world. And I felt like I was a complete failure. My reputation was gone. And I remember my investors, Peterson Ventures in particular, we were talking, they were like, Bubba, we know it wasn't you. Like, it's not your fault. It happens. And hey, we'll back your next venture. And I remember when they said that, it was like this new light of understanding and appreciation of they get it. Like they get, and it helped me overcome some of my fears of being a failure and me not associating myself solely as an entrepreneur and as that business. It really helped. And I think if anybody's out there who's gone through some sort of a business that didn't pan out, like, you're going to learn more with the failure than you will a success, period. But know that isn't just that's not your story. It doesn't end there. That's just a new chapter. And you can create a new chapter. And really the idea of failing fast, that's the Techstars kind of mentality. That's how all entrepreneurs, in my opinion, should be. Go hard and fast. And if you're going to fail, great. Move on to the next idea. But don't get down like I did on myself.
I think we all get down. I got down.
I know.
And if even if it's not your fault, they know you're exploring and you're panning for gold.
Yeah.
And sometimes you think you have a nugget and you said, hey, I found 2-3 nuggets. There should be a vein. And sometimes there's just not a vein there.
Yeah. No, I think that's a good way to look at it. So as an angel, some of the hardest things I've learned is like, number one, when 2 of the businesses have failed, the very first thing I say is like, I still love you. Like, we're still friends. I still love you. And I know it's not your fault. And I hope because of that empathy that there's, and I feel like we've been able to grow even stronger as a relationship because I've been there. I've felt it.
But you're also an includer. We just realized this.
Yeah.
It may not be as easy for you as for some.
That's true. That's true.
Well, Bubba, you're amazing.
Oh, thanks,
I know
man.
you've got to go take care of your kids.
That's
Thanks
right.
for joining us on this podcast.
Woo!
Go to Influence.vc if you want to learn more about him.
Connect with me
have
on LinkedIn.
His LinkedIn profile in the bottom of the show notes. So we will see you on the next episode. If you have any more questions, ping us and we'll try to bring him on again another time.
Thanks, guys.
Thanks,
Love
guys.
it.